option that you can have
Mhm.
the bank of mom and dad help you out, or a gift from a family member, which really can help that client buy that home that they're looking for.
That's awesome. I love how you said the bank of mom and dad. Hi, everybody. Good afternoon. This is Joseluiz Morales. Welcome back to the Morales Group Show. Today, we have a repeat guest. The name is Lora Fischer. She works for U.S. Bank. She did a previous episode to us on land and construction financing, which is a great interview. If you haven't watched it, go through our channel and find that interview. Today, she's going to be talking to us about bridge loan financing, how to use it, what is it, who does it benefit, and how somebody can take advantage of it. Welcome to the show, Laura. How are you?
Thanks, Jose. Jose is really well. How are you?
Perfect. So I want to encourage our viewers, if you have not subscribed to the channel and you've enjoyed our previous episodes, hit that subscribe button, hit that bell. That way you can be notified of future interviews. So Laura, let's go ahead and let's get started. So what is a bridge loan and who does it benefit?
Okay, so a bridge loan or bridge line of credit is typically on your primary residence. It's an interim financing. So this is for when somebody's looking to purchase a new home but hasn't sold their existing property. They can put a line of credit on their existing residence.
Okay, so it's basically an ideal loan product for somebody looking to buy and sell at the same time.
Right.
Perfect. Now,
well, I was going to say, you as a real estate agent, when you get offers, and if you get an offer that's contingent on the buyer selling their existing home, how do you feel about that? Is that as strong of an offer when it has that contingency?
No, and that's why I wanted to bring you on the show, just because it's not. The reality is, let's say I have 5 offers on a property. 4 of them are not selling a property, and 1 of them is selling a property. Even if the one that is selling a property is higher down payment, sometimes because they have that contingency, meaning there's another property that things can go wrong on, meaning it can fall out of escrow, it may not appraise, the inspection contingency may not go right. It just adds a certain level of risk, which makes that offer less desirable. What it sounds like is that this product is specifically to help somebody in that way to be able to get the house that they want and not be looked at as a weaker offer because they're contingent upon selling their property. So how would that work? Meaning how does it work?
So I'm going to use some just basic numbers to keep this as simple as possible. So if your home is worth $1 million and you have a loan for $200,000, you've got a lot of equity in that home. So the bank will come and we can do a bridge line of credit for up to 80% loan to value. That's up to $2 million property value. It goes tiered after that. So that way you could use the equity in your home. We will pay off the existing first mortgage. Your new payments are interest only. So this allows you to then go into a contract to purchase another property and not have the contingency that you sell your home. In fact, when you go into that new purchase agreement, the seller's agent, nobody needs to know because you have your financing in place. And along with the bridge line, we can also do the pre-approval for your new home as well. So you
guys basically handle the entire thing. So in that example, let's say it's $1 million. You can borrow or leverage up to 80%, which that would mean $800,000. There was a first loan of $200,000, so they have approximately about $600,000 in equity. What you're saying is that they can use that equity as a down payment. They can use some of it or all of it if they wanted to purchase the next property. And that's all done on the back end, meaning that once that gets done, they can make an offer non-contingent on that property. But how does it work? Meaning, do you have to secure the bridge loan financing before you make the offer on the next property? And how long does that process take?
That it is ideal to set it up before you find a property, because I just had one that she didn't think she'd buy a new home for a couple of years, but then she found the home and fell in love. We're already in contract and we're trying to do the bridge line as quickly as possible. So ideally you go, okay, we know we want to buy another property. Let's go ahead and do this bridge line, and you get it set up. Because the other thing that we're seeing happening is people will sell their home. Great, but now they can't find a new home. So this gives you gives you leverage. You get to stay in your home, you get to sell it at your convenience, but yet you get to use that equity so that when you do find the new property that you want to make an offer on, you're good to go. So this process, I'd say give it 4 weeks. I think we can do it. We've done one in 2 weeks, but I would really state, let's save everybody a lot of headache and sleepless nights. Give us 4 weeks to get it done. It really is a pretty quick process.
And then how long can it be for? Meaning, like, it's bridge financing, meaning it sounds like it's somewhat temporary. Is it like if I do the bridge financing and it takes me 6 months to find my property, is that okay? Or what are the general terms in that regards?
So great questions to ask. The bridge line is for 12 months.
Okay.
So it's good for 12 months, which is a great time period. So let's say we get to the end of 12 months, you haven't found a new property. Oh goodness, you've taken out this big loan. Well, you can extend it for another 6 to 12 months, or you could say, you know what, this isn't working out. Let me go back to my banker. Let's go ahead and refinance and put the loan back on, pay off the bridge line, take care of it that way. I have never seen that happen. It's always played out that they've been able to secure the new property, sell the other home, but that's just,
yeah. And then you're basically, if the market's appreciating, you still own your property as well too. What I was going to ask you is, so let's say back to that example of $1 million, it's worth $1 million. You have 600,000 in equity. Let's say I only want to put $200,000 down. Does that mean that my payment is on 400,000 versus the 200,000 on my original, or how does that work? Just so I understand.
So when you come to the bank and you apply, we will go as high as 80%. We don't need to go to 80%.
Okay.
So if somebody says, I already have some funds, I'm only short 200 or 250,000, we'll do exactly the amount that they ask or that they need.
And they're making payments on that while they find the next house, because it's basically available for them. The only difference is that it's interest only and not principal, which makes the payment lower, which gives them the option of having the money available as well too.
Correct. So it is an interest only payment. Typically when underwriters look at if somebody has a mortgage with interest only, they qualify them at a principal and interest payment. But on this product, we do qualify just with the interest only payment.
That's awesome. Now, how would this be different, Laura? And this is just the question that popped in my head. Let's say that same scenario, $1 million, I owe 200,000. And let's say that I just get a home equity line of credit. Is that like the same thing? Because I know that that's a product that U.S. Bank offers as well too. And I know with the equity line of credit, you're only paying if you use it. So is there a difference between that, or is there a benefit to structuring one way or another?
So they have that option. And that was one of the things at the end, when we talk about, anything you want to add, that would be one of the options. So you cannot get a home equity line of credit if your property is listed for sale. So if your property is listed for sale, you want to do a bridge line, we can do that. This is always a conversation that we would have with the client to say, well, here's your options, and then let them think about it and decide which option is best for them. So that's going to depend on how much their first mortgage is, how much equity they have, and can they handle the payment of the first mortgage and the home equity line of credit. The bridge line is going to be that interest only, so that might help them. They might need just the interest only payment so that they can qualify for the new mortgage as well.
Yeah, absolutely. Okay. And then what are the rates? Are the rates similar to just a traditional loan, or are the rates higher, lower? I know that it's a year term. And then obviously the option to extend. What does that look like?
So the rate is today, if we were to do, that scenario of $1 million loan up to 80% loan to value, that interest rate would be 6.99%. It is a higher interest rate. There are no points and there is no cost to set it up as well.
That is awesome. I think a lot of people only look at the interest rate, Lora, but sometimes they don't look at the points or they look at the cost of setting it up. So somebody can be offering you a 4%, but if there's 2-3 points, that could be $10,000-$15,000 right there. And a point is a percentage, basically, just for our viewers to understand. 1 point is 1%, 2 points is 2%, 3 points is 3%, just because we're having the real estate conversation.
Right.
Yeah, okay. So that's actually good if there's no cost and no points, it's just the interest. And then once you sell the property, or once you open up escrow on your next property, at what point could you put your property on the marketplace? Could you put it on the market at any time? Could you have it on the market as well too?
Right. You could have it. You could already have it on the market when you do the bridge line of credit. And as soon as you're an escrow on another property, you can list your home on the market. So, but let's talk about real life. So we're all busy people.
Yeah.
And I know I'm buying this house and there's a few things I want to do to my new house, and then I need to get my home ready. So the nice thing is it gives you a little bit of time. That's what I've heard from clients, is they feel like it's not as rushed. They get things moved to the new house, they get the old house, the repairs, whatever they needed to do, then they put it on the market. So I think the flexibility is what people really appreciate with the bridge line.
Yeah, and that's one of the issues sometimes when somebody's selling and buying. Like, let's say their sale closes escrow today and their purchase closes escrow tomorrow. It makes everything very rushed at the end. It makes it so that they're moving from one place to another, and it's a very stressful couple of days. We usually try to get our sellers a week or 5 days after the close of escrow so that it reduces that. But this allows them to be just more in control of the product or of the situation.
Right.
So I know that there's other lenders that offer home equity lines of credit. I know that there's other lenders that offer construction loans. I know that you guys really specialize in those types of products. You guys are almost like a unique bank that has like these little situational products that really benefit the consumer. What would you say makes US Bank different than you're just another bank that maybe offers the bridge loan?
Well, I don't know of any other banks. If I will tell any viewer, if they have a relationship with an existing bank, talk to your banker, find out if that's something that they offer or not. The thing about US Bank, we're the 5th largest bank in the United States, but we feel like a very small bank. There's a huge gap between number 4 and number 5. I love our portfolio products, great communication with underwriters, very collaborative too. So if there's something that you're asking for that I don't do, well, maybe it's one of my bankers on my team or some other department that can help our clients. So I think the collaboration with US Bank and just a very solid institution.
Absolutely. I agree with you 100%. My dad was a member of US Bank for a long time, and it was very relationship based, very pleasant experience. Great. So I think we covered most things as it relates to bridge loans. Is there anything else that maybe we didn't cover that you think would be of value to the consumers?
So there are clients that can afford, everyone's looking to buy at such a hot market. They can afford the payment, but they don't always have the down payment. So great. The bridge line is a great way to do it, the home equity line. But the other thing some clients don't know is that we can take gifted funds from a family member for a down payment. We're pretty liberal about that. It's a form they fill out. They send us the bank statement and we're good to go. So I don't think a lot of clients think about that or know that that's an option, that you can have the bank of mom and dad help you out, or a gift from a family member, which really can help that client buy that home that they're looking for.
That's awesome. I love how you said the bank of mom and dad. It's funny. And then obviously, once you get done with the bridge loan, you guys can help the buyer with their new loan as well too. So it's almost like a start to finish type of relationship,
Yes.
in other words.
Exactly. Yeah. So we would have them pre-approved so that when they make the offer, we've got the bridge loan in place. So there's no contingent noted in the purchase contract that they have to sell the existing home. Nobody needs to know about that. That's all smoothed out behind the scenes, and we can close on time.
Yeah. So what I would recommend to the viewers, if you're considering selling and buying at the same time, you have many different options available to you. Either consult me or Laura, and we'll provide you with just different options that may be available to you, and just different things for different people, because not all people want to be out from one day to another. Some people may want to take their time moving. If the market's appreciating, it may make sense for you to hold on to the property a little bit longer, and kind of wait. Like, we've been in a extreme seller's market for a long time. So I want to say thank you, Laura, for being on the show. If viewers wanted to get a hold of you, what would be the best way for them to do that?
So you can give me a call, 805-245-9678. You can also email me, laura.fisher@US Bank.
Perfect.
So happy to
So
help.
once again, Jose Luis Morales with the Morales Group Show. This is episode number 72. If you haven't subscribed yet and you've enjoyed our content, subscribe. You'll be notified whenever we have future videos. The other thing is we have a smaller channel called Jose Luis Morales Clips. And basically what that channel is just smaller segments of our larger interviews. And we basically post those just to make it more straight to the point type of interviews where you can go get what you want right away. So once again, Jose Luis Morales Group Show. This is episode number 72. Thank you so much, and stay tuned for the next episodes.
Thank you.